Okay, Assalamualaikum and a very good day to our dear lecturer, Miss Moizura Muhammad Isa. Today, we are going to do a video presentation about the market and stock analysis. Well, the industry that we've chosen for the analysis is food and beverages. Now, before we start the video presentation, I would like to introduce, starting from myself, I am Muhammad Iman Afiq bin Zulkifli, and alongside me for the presentation is Nur Anisa binti Manizan, Muhammad Afiq Fikri bin Muhammad Nazri, Muhammad Zafri bin Zambari, and lastly Muhammad Aiman Hassani bin Abdul Nasir. Now without further ado, let's start the video presentation.
Hi, I am Nur Anisa binti Manizan and I will summarize about performance of FBM KLCI. So in 2019, the stock market is at the worst point than in previous years. KLCI dropped by 101.82 points and market capitalization was reduced to 1.04 trillion ringgit compared to previous year. In 2019, concerns over slower economic performance have weighed on banks as profits had seen a quarterly decrease. Move on to 2020. In 2020, FPMKLCI has experienced a tremendous decline in history starting in March 2020. The benchmark index was down at 1358.41 points when the Prime Minister made a decision to do the MCO all over Malaysia as a step to reducing COVID-19 disease from continuing to spread. Month after month, FBM KLCI began to show an increased rate because the government has given flexibility to the economic sectors while MCO. FBM KLCI hit a 21-month high, which is 1681.51 points on the approved 2021 budget. It is the highest point that was achieved by Malaysian stock market in 2020.
Hi, Assalamualaikum, and my name is Afiq Fikri bin Muhammad Nazri. So today I will talk about the food and beverage industry performance. Food and beverage is the fast growing sector marked by a wide export market in the Malaysian food and beverage industry. The most important F&B export from Malaysia are in the category of oil and fat, especially is the palm oil based product, for which the country is one of the world two largest exporter. Okay, so in the 2019, the F&B sector accounted for roughly 9.8% of Malaysia export. The nation is also heavily reliant on import of many staple for domestic consumption, which is rice and most of meat and seafood. In 2019, the import constitute 7.8% of overall import. The process of food export accounted for approximately around RM20 billion and were exported to more than 200 countries relative to 18 billion in 2018 for processed food import. For the 2020, the market for all sector going slow because of the COVID-19 and the moving control order. So all of the company need to shut down. So the export and import activity will be slow and cannot give a good performance for the market and industry.
So this is Ajinomoto Malaysia's Berhad. Ajinomoto Malaysia Berhad manufactures and sells monosodium glutamate or MSG and other related products. The company also produces some consumer food products such as food seasonings, flavor, salt, and pepper, and sago starch. So we move on to Ajinomoto's fundamental performance within the 3 years. So within 3 years, Ajinomoto Berhad has shown a very positive increase, especially in their net sales, total asset, and profit before tax. As we can see here, the net sale profit before tax and the total asset was increased over the year. Move on to the ROE and ROA. ROE and ROA shows a decline within the 3 years. So for return on equity or ROE, Ajinomoto indicates a rate of decline from 12.87% in 2018 to 12.08% in 2020. This rate of decline indicates that Ajinomoto may be mismanaged and could be reinvesting earnings into unproductive assets. And then for return on assets of Ajinomoto, it shows a decrease in percentage, which is 12.32% in 2018 to 10.31% in 2020. A decrease in ROA indicates that the company is not efficient in using its assets to generate earnings.
The technical analysis for Ajinomoto Berhad Malaysia. The chart for Ajinomoto stock price currently is a downtrend starting from 2018 until now. It is a downtrend. The stock has not made a new high price, which doesn't break resistance. So my prediction for the future price using the pattern. The pattern that I found in the chart is a flag, which is the bearish flag, because the stock price was in a downtrend before the flag began to form, and it is a bearish continuation pattern. Okay, so beside that, my prediction price using an indicator which I'm using a MACD and RSI. The MACD show the price will decline because the MACD line, which is the blue line in the picture, cross below the signal line, which is the red line. That's mean it sell signal. So for the RSI, it also show a sell signal because the RSI go above 70, which is the overbought line. That's mean the RSI is above 70 and then move down, cross below the overbought line, which is the 70 line. So this is the sell signal too. So my recommendation for the medium term investment, this is not good choice to enter the Ajinomoto because they in a downtrend. But for the long term investment, this stock has a big potential to be bullish because Ajinomoto is a big name in the F&B industry, and we also know the food and beverage industry in Malaysia is very strong. I can conclude that this stock will make a break one day for the future.
Now, moving on to the fundamentals of this company that I've chosen, that is CI Holdings Berhad. Now, as you can see in the slide, there is two variables. That is the return on equity that is presented by the blue lines in the chart, and return on asset that is presented by the orange line in the chart. Now, you can see in the chart that is the lines are across a period of 3 years, that's from 2018 to 2020. As you can see on the return on equity, that the percentages is the highest is at 2018, right, almost to 18.7%. Then it somehow decreased to 11.8%. Then it increases back to almost 16.7%. Okay, this is important to the investors because ROE represents the overall profitability of the company, and investors look out for this because if the company pays out dividend, and the dividend is depending on the return on equity. Now, moving on to the return of assets. Okay, this is related to the how the company is ability to gain profit from its asset investment. Okay, as you can see here, the company manages to get 7.65% in 2018. That is the highest out of the 3 years period, and decreases in 2019 4.72% and increases back to 5.60%. Okay, the same trend for the ROE. The technicals of this company. Now, the methods that I've chosen for forecasting the price movements of the share is, first of all, volume. Okay, as you can see in the chart or in the slide, there is a note that I say watch out for high volume. Okay, the reason behind this because volume tells a lot of information about amount of investors that is investing or pulling out of the shares. And second reason to watch out for high volume is for future investors. Okay, when a lot of investors are pulling out of the shares, or the prices of this share tends to go lower. Okay, and that is where the future investor can find the perfect price to enter for entry. Now, moving on to the second method that I've chosen is through moving average convergence divergence, also known as MACD. Okay, as you can see here, the yellow box there say that to hold. Okay, the holding is for the current investors. Okay, because when the lines crosses between the MACD, which is the blue line, and the red line, which is the signal line, when they cross, especially in this case, it will go down and causing the price to go even lower, and that is a sell signal. Okay, however, on the stochastic RSI, there is a sell signal happen before a few days before. As you can see, where the percentage K, which is represented by the blue line, and the percentage D, which is represented by the red line, crosses above the 80. That is the overbought area, and the price go down. Okay, for futures investors, however, you can see the green box there. That is where you can buy the shares at lower price, because at that time the lines will cross below the oversold area. Okay, when shares are oversold, right, the prices tends to be a little bit lower, and that is where the future investors can enter the market and put their investors in, because once the lines cross, it will go up.
So now we will move toward the company that I have chose, that is Apollo Food Holding Berhad. So from the chart that I have shown you, and we have ROE and the ROA for the Apollo Berhad from 2018 and to 2020. From the 3 years, I can conclude that the best performing year for the Apollo Food Holding Berhad was on 2019, with the highest ROE of 7.11% and ROA at highest with 6.54% compared to 2018 and the 2020. So on the 2018, the ROE for Apollo was at 4.54% and increased 2.57% in the 2019, then have a slight decrease of 1.26% to 5.85% in the 2020. So the higher the ROE means that the equity company will affect the company how to manage to invest in its earning in the productivity of the stockholder equity. It means that the equity for the company managed to handle its equity more better in the 2019 compared to other 2 years. So we move to ROA. So ROA means that return on asset. So the ROA for Apollo for the 2018 is at 4.20%, and then in the 2019 it has increased to 6.54%, and then have a slightly decrease in the 2020 at 5.40%. So based on this ROA, it means that on the 2019 alone, that the company was better at utilizing its asset to gain
its earning better in the 2019 compared to the 2020 and the 2018. So now we will move to the fundamental analysis that I have predict on the futures of this Apollo Food Holding Berhad. So as we can see on the chart, it shows that on the full whole year of 2020, the trend line of the stock price was at a uptrend trend line, which from the early 2020 until the late 2020, at around until December, the trend line start to show some decreasing. So the other method that I choose to confirm this trend is through MACD and RSI. So as for the MACD signal, for the futures part, I think the trend line, the chart will be starting to bearish, which we can see from the MACD. From the MACD line on the blue line, have crosses the signal line. So it means that it indicate that it was a sell signal. So other than that, there also an RSI. So the RSI is show the sell signal, which it has crossed, the RSI line has crossed the overbought line at the 70. So when it across the overbought line, that means it will indicate that it was a sell signal in the future. And other than that, there also a high volume of people who dispose their stocks. So it means that in the near future, the stock price for the Apollo Food Holding Berhad will be bearish, where the price will start to decreasing until it find a new support line.
Assalamualaikum warahmatullahi ta'ala wabarakatuh. My name is Muhammad Aiman Sani, and today I would like to present for the fundamental analysis for the power company. From the chart, we can see that there is a ROE and ROA that I have been prepared for the year from 2018 to 2020. Okay, based on 3 years, I can conclude that the higher ROE is on 2020, which is 20.1%, while for the ROA, the highest ROA is also in 2020, which is in 13.7%. So I would like to continue in 2018. In 2018, ROE for this company was 4.7%, and then it slightly increased to 12.9%, and then it continued to get more higher to 20.1%. This show that in the year of 2020, this company this company earn more profit without using it more capital in gain more revenue for their company. For the information, the higher of the ROE, it indicates that it show that the company show the good performance in manage their equity. Next, I would like to continue with the ROA. In 2018 was 2.7%, and then it slightly increased to 8.5%, and then continue to increase to 13.7%. For the ROA, if the ROA is continue to increase year by year, I can conclude that the performance of the company is good, because the higher the ROA, the better the company manage their asset to gain more profit. This means that this company using less of its investment in gaining their revenues or profit for their. I would like to continue with the technical analysis for power company. In my opinion, for the future performance of power stock is I use based on the chart pattern and indicator. The biggest movement of the trend line that I had detect for the year of 2020 is a bullish trend line occurring until June 2020. From that particular trend line, I can identify that the chart pattern was occurring is rising wages, which is occur until January 2021. Based on the pattern, it shows the trap between two lines, which is support and resistance, that are nearly to be narrow. This trend normally suggests that the price of the stock will decrease, and after a moment, it will increase for permanently. For the MACD, it show that it showed no any of buying or selling signal, but the MACD line is nearly crossed the signal line on 13 January of 2021, which is as predicted. The MACD will cross the signal line in the future, which is it showed the buy signal. For the RSI, it showed the buy signal as the RSI was below the oversold line, which is below the 30, and is starting to increase above the oversold line on 7 January 2021. Okay, I can suggest that regarding this firm, is good for the long investor to invest in this stock, as the bullish convergence is occur in the MACD indicator, as this indicates that possibility of the price movement change from the trend to uptrend. Besides, it also has a positive relationship. This stock have a positive relationship with the F&B industry. Thank you.